Hey, what's up, Fanbase Finance? Ron here. We're going to go through the now May 1st edition of the Fanbase Finance news update. So let's jump right in. Number one, the U.S. economy contracts in Q1 of 2025. So the U.S. economy shrank by 0.3% in the first quarter of 2025, marking the first contraction since early 2022. The decline was primarily driven by a surge in imports as businesses rushed to stockpile goods ahead of new tariffs imposed by the Trump administration. The resulting trade deficit significantly dragged down GDP figures, as you saw this week. Number two, consumer confidence declines again. So, as you know, consumer spending makes up 70% of GDP. So consumer confidence fell for the fifth consecutive month in April, reaching levels not yet seen since the onset of the COVID-19 pandemic. The decline was largely driven by deteriorating expectations regarding business conditions, employment prospects, and then future income. All right, number three, the stock market ends sort of mixed. So despite initial losses following the GDP report the other day, major stock indexes rebounded by the end of the month. The Dow Jones average rose by also 0.3%. The S&P 500 edged up by 0.1%, while the NASDAQ slipped by 0.1%. However, all three indexes posted losses for the month. But guess what didn't? Real estate. Number four, investor sentiment remains cautious. A recent JP Morgan survey indicates that 93% of investors expect the S&P 500 to remain at or below 6,000 over the next year. Concerns over tariffs, potential stagflation, and economic uncertainty are influencing the cautious outlook. Number five, corporate earnings snapshot. So Tesla reported a 71% drop in first quarter earnings, citing increased cost and declining sales, among some other things I should mention. The company is reassessing its strategies amid economic headwinds. Might want to start with your leader there. PepsiCo, while revenues beat expectations, earnings per share lagged, leading to a stock decline. The company attributes the shortfall to higher operational costs and shifting consumer preferences. It's been going on for a while, Pepsi. Number six, tariffs trigger business pushback. So CEOs from major companies, including Amazon and Pepsi, have expressed concerns over the impact of tariffs on business costs and consumer prices. Some companies are absorbing the cost, while others warn of potential price increases for consumers. And then number seven, the executive orders continue to reshape policy. So President Trump has signed numerous executive orders affecting various sectors, including aggressive tariff implementations and policy shifts in education and environmental regulations. So you've seen some of that with Harvard. You've seen some of that in my industry, in the CDFI industry, where there's been some impacts on the CDFI fund from executive orders. So listen, that's sort of your updates this week for business and finance news. So let's get back to the room topic. We're talking about the wealth of health, Fanbase Finance.